Hello, and welcome to the 30th episode of Kanga Crypto News. What are the topics today? Securitize launches USDC conversions for BlackRock's digital liquidity fund. MiCA-compliant stablecoins take market share of euro-stablecoin sector. Political shift drives $407 million inflows to crypto products. Telegram removes the crypto wallet in France. This and more, so watch till the end. But before we begin, remember that all information for Kanga Crypto News is gathered by experienced Kanga analysts based on reliable sources. Also keep in mind that this is not an investment advice. Kanga Crypto News episodes are released every week on Friday. If you want to stay up to date with the most important information from the crypto world, subscribe to the channel. Be sure to click the bell so that you don't miss important news. So let's start with a very interesting and important topic, stablecoins. Securitize, a real-world asset tokenization company, announced on Tuesday the launch of conversions between Circle stablecoins and US dollars for BlackRock's USD institutional digital liquidity fund, BIDL. The integration aims to reduce investment costs and ease the subscription process for traditional finance players investing in BIDL, Securitize said in a statement. The firm issues BIDL tokens on the Ethereum blockchain in collaboration with BlackRock. Zero Hash, a blockchain infrastructure company, will facilitate the conversion between dollars and digital assets for the service, per the statement. This integration allows digital asset companies to remain on-chain throughout the entire investment lifecycle, enabling near instantaneous and transparent settlement and transfers across platforms. Carlos Domingo, CEO of Securitize. This integration allows digital asset companies to remain on-chain throughout the entire investment lifecycle, enabling near instantaneous and transparent settlement and transfers across platforms. Carlos Domingo, CEO of Securitize, told Decrypt. The offering available to qualified investors is designed to accelerate investments into BIDL, Domingo added. The fund, valued at around $550 million, is among the largest of its kind, according to data from Etherscan. The move comes as tokenized real-world asset funds grow in popularity, particularly following the U.S. Securities and Exchange Commission's approval of 11 spot Bitcoin ETFs in January. In April, BIDL surpassed $375 million in assets under management, overtaking Franklin Templeton's on-chain U.S. government money fund and the largest tokenized treasury fund. BIDL, whose assets are estimated to have ballooned by roughly 46% in the following months, allows institutional investors to earn yields on U.S. dollars by purchasing tokenized shares, which represent investments in secure assets such as U.S. Treasury bills. According to the firms, the key advantages include immediate settlement, enhanced liquidity, and transparent on-chain transactions. In a bid to capture interest in the rising sector, several new blockchain-based RWA funds have emerged in recent months. In September, Guggenheim Treasury Services partnered with blockchain firm Zeconomy to launch a digital commercial paper fund, while Midas introduced two real-world tokenized products across Europe. Additionally, Ondo Finance and Mountain Protocol have begun using BIDL as a backing asset for their yield-generating products. But that's not all. What else is happening in the stablecoin market? Let's move to Europe. The euro-backed stablecoin market has shifted following the European Union's markets in crypto assets, MiCA's, regulations. MiCA-compliant assets like Circles and Societe Generale EURCV now hold 2/3 of the market, according to the report from Kaiko Research. In the euro stablecoin market, the market share of MiCA's compliant euro stablecoins, including Circle's EURC and Societe Generale's EURCV, reached an all-time high of 67% last week, Kaiko Research analyst said. This shift has been largely driven by Coinbase, which the report said overtook Binance as the leading platform for euro-backed stablecoin trading in August. While Coinbase has embraced MiCA's compliant assets, Kaiko analysts said that Binance has been mainly promoting non-compliant euro stablecoins for non-European users through its zero-fee model. Despite these changes, the report noted that weekly trading volumes for euro-backed stablecoins have remained relatively stable at around $30 million since MiCA's implementation in June, a marked decrease from the $100 million weekly volume seen in March. Kaiko analysts attributed the shift in the market share to exchange delistings rather than a surge in demand for euro-backed stablecoin. The report also said that the MiCA's regulation will influence USD-backed stablecoins. Coinbase has announced plans to delist Tether's USDT and other non-compliant stablecoins from European users by December 30th, 2024. Kaiko's report suggests that this could benefit MiCA's compliant USD stablecoins, particularly Circle's USDC, which, according to the report, currently holds the largest share of MiCA's compliant USD-backed stablecoins and has already seen its market share rise from 10% to 12%. Observing what is happening in the world, one might assume that some extremely powerful people would love to replace cash with virtual currency. Will this happen anytime soon? Some say not necessarily. Vyacheslav Volodin, Speaker of Russia, highlighted on Monday that BRICS is gaining recognition as a key player in establishing a multipolar world. In a Telegram message, Volodin noted that BRICS has become a major economic force, with the countries like Serbia expressing interest in joining as an alternative to European Union. He pointed out that more nations view BRICS as a guarantor of multipolar world, free from blackmail and interference in their internal affairs, unlike what they face in partnerships with the EU. He underscored a significant geopolitical shift, stating, "Washington and Brussels are using their hegemony, as nations are opting for equal dialogue and mutually beneficial cooperation in the interest of the people, rather than serving the US and its allies." The speaker contended that the policies pursued by Washington and Brussels have backfired, leading countries toward BRICS, whose combined economies now outpace those of the G7. Such policies from Washington and Brussels, as we can see, have had the opposite effect. The economies of BRICS countries are now much larger than those of the G7, he claimed. Is something bullish coming? The influx of large amounts of money into crypto products may indicate this. What potential origin does one of the sources give? Cryptocurrency investment products posted another successful week as Bitcoin led weekly inflows with $419 million. Digital asset investment products saw inflows of $407 million during the week from October 5th through 11th, CoinShares reported in its latest digital asset fund flows weekly report. The fresh crypto inflows followed a minor $127 million sell-off the previous week, which came amid stronger than expected economic data in the United States. According to CoinShares head of research, James Butterfield, the increase in crypto investment products last week was likely influenced by the upcoming US election rather than monetary policy outlooks. This trend is evident in the fact that stronger than expected economic data had little impact on stemming outflows, Butterfield wrote, adding that other factors such as polling toward Republicans led to an immediate boost in inflows and prices. He also mentioned that Republicans are widely perceived as more supportive of digital assets. On October 10th, major publications, including the New York Times, reported on new polling which suggests that control of the US Senate would flip from the Democratic Party to the Republican Party after the upcoming elections on November 5th. The election will determine the next US president in the race between Republican candidate and former President Donald Trump and Democratic candidate, Vice President Kamala Harris. Now, let's check the situation in South Korea. On October 13th, South Korean officials reportedly revealed plans to launch a public-private committee on virtual assets later this month. The 15-member committee will address structural problems in the virtual asset market and explore cryptocurrency legislation. Led by the Financial Services Commission, FSC, Vice Chairman, the committee will serve as a policy and institutional advisory body. It will include 6 members from government agencies, including the Ministries of Finance, Justice, and Information and Communication Technology. The remaining 9 committee members will come from the legal profession, virtual asset academics, and virtual asset-related organizations. Individuals with expertise in consumer protection and information security will also be included. While no launch date has been announced, reports suggest that the selection of private sector members of the committee is nearing completion. According to another report, one of the committee's specific roles will be to evaluate South Korea's plans to approve spot cryptocurrency exchange-traded funds, ETFs, and allow companies to open corporate virtual asset accounts. Finally, some information about the arrest of Pavel Durov, the founder of Telegram. New events took place, but let's recall why the arrest took place. The French authorities have arrested Pavel Durov in connection with 6 charges, many of which are related to the management of illegal content on Telegram platform, such as the distribution of child pornography material and drug trafficking. However, 2 of the charges have had a greater impact on the technology sector. The offering of cryptographic services without the necessary government declarations and the importation of cryptographic applications without authorization. These accusations leverage a French law from 2004 that requires anyone offering encryption services to notify the NSSI, the French cybersecurity agency, of the technical characteristics of the cryptographic tools, including the software source code. This regulation, although little known and rarely applied, is now used against Telegram, which is not end-to-end encrypted by default, leaving room for interpretations regarding the control over user data. The lack of compliance by Telegram with the regulation has led to serious legal implications for the company and its founder. The French law appears to be in contrast with the vision of Telegram, which has always declared itself in favor of privacy and confidentiality of communication. The removal of the crypto wallet service by Telegram seems to be a direct response to the intensifying French regulatory pressure. The wallet, which allowed users to make transactions in crypto directly through the app, has been a critical point, as European governments have increased scrutiny on services related to cryptocurrencies to prevent illegal activities such as money laundering and fraud. With the tightening of regulations, Telegram has decided to suspend the service in France to avoid further legal complications. There are certainly many people who did not like the suspension of Telegram services in France. Has this affected you too? Let me know in the comment. This was the 30th episode of Kanga Crypto News. More is coming soon. Remember to give us a sub and a thumbs up. Take care and see you in the next episode. Bye.
We are Kanga, beyond crypto.